Welcome to your Mortgage Insider Update for this week, July 15th. Some wild events over the weekend have led to a relatively calm start to the market as far as interest rates and stock markets today. Thank goodness there wasn't a bigger event to take place over the weekend. We did have a long speech from the Federal Reserve Chairman this morning, actually speaking in front of a huge group of economists in Washington, D.C., was interviewed today. Didn't say anything that would tip his hat on the future of interest rates. All that was said is basically there's no political motivation around their decisions, which has risen the likelihood to around 96% of a Fed rate cut in September. So the market seems to think that that's the next most likely time the Fed would cut the rate, even though it is right before the election. The Fed chairman basically tipping his hat to only that's definitely on the table, that there's no political thoughts, or they're not going to bend their reading of the economy around an election. Let's take a look at the charts. So just before 11 a.m. on the West Coast, pretty advanced in the day as far as the East Coast goes. Markets have settled into an increase of 10 basis points on the 10-year Treasury. Mortgage-backed securities do work in the inverse to interest rates on the 10-year. So the price has dropped. So that means interest rates, all in all, are higher slightly today. So we look at the 10-year first. 10-year Treasury, like I said, has come significantly down, but up today. So we can see it is staying below levels that we had seen back in mid-June. These levels were the low points on the 10-year prior to this run-up, just before we got the unemployment. And then now the CPI report came out last week, which you can see that's the response from the CPI coming in less than expected. So a good sign for interest rates. Let's shift over and take a look at the mortgage-backed security. Again, these prices are working inverse. So as the price rises, we can see the price has gone up, up, up. That has been good for interest rates. That's reflective of lowering interest rates. And at this point, just kind of hitting a ceiling. So as we back out a little bit, you can see that ceiling was hit last and actually was, capped interest rate as far as the advancement of lower interest rates on the price back on March 8th. So we're seeing levels back in March, which was, pretty okay time. And prior to that, we'd have to go to beginning of the year and even into last year to have seen a time where the mortgage-backed security prices have seen these levels. So it's likely we stall a little bit here until some new news comes out. So as the prices and interest rates overall have hit a new low for the last, call it the last 90 days, we'll see if any new catalyst can improve interest rates further. So with that, we'll come back to you next week with a new update. I'm sure there'll be new data points after the events of this last week. We'll see no new major inflation reports, but we will start to see normal unemployment reports on Thursday with new claims and continuing claims. So that's going to be the most likely market movers over the coming week, unless anything new hits the stage. So we'll come back to you with an update next week. Have a great one.